Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is July the 6th, 2011. Again, there's a lot going on in the markets today. We've had a big rally last week. Yesterday was more of a pause day. If you watched yesterday's video, we talked about the market really putting in a flat to sideways day, and that's pretty much what we got. As Dow Jones closed down about 13 points. The S&P was negative by about $1.79, and the Nasdaq Composite actually scratched out about a 9, almost 10-point gain. So really a flat day overall for the major indexes. But a lot to go over this morning, so let's get right into the charts. We have the futures under a little bit of pressure here, trading down by about $6.75, right to the 1330 level. So we'll see if the market does give a little bit of a pullback. Last week's rally was tremendous, to say the least, point-wise. Volume trends were okay. They weren't terrible. They weren't spectacular either. But yesterday you got a little bit of a pause day. Today we're getting a little bit of pressure, at least to start the day. So we're trading down about, well, make it 7 points now. So if the market is down, that tells us one thing. That means that the U.S. dollar index is probably trading higher. And is it ever? U.S. dollar index is soaring higher today by 43 cents. Make that 44 cents to 75.42 on the U.S. dollar index futures chart. And you can see the futures here on the dollar are just higher. Market is lower. So that inverse relationship is still very much intact and should be watched throughout the day, especially today when we're getting a little bit more volume. A lot of times when the market has no volume, and yesterday the market had very, very little volume because it was more of a holiday hangover or an extended holiday period. But today we should get a little bit more volume, and the dollar will have a little bit more of an inverse effect to the markets. Now, we should keep an eye on the dollar, U.S. dollar index. We've staged a nice rally yesterday, another little rally today. And so far, you're getting a little bit of a move higher. That should put a crimp in the inflated market. So we'll see how that all plays out and what happens today. Couple things you want to go over real quick while we're looking at this dollar chart is to remember that the European Union is a mess. Yesterday, Moody's downgraded Portugal, saying that they would likely need another bailout. Just remember, Greece was bailed out a year ago and needed a secondary bailout. Portugal was just bailed out about 6 to 9 months ago, and they're going to need another bailout. Will Ireland need a bailout soon? Will Italy need their first bailout? Will Spain need their first bailout? Well, I have news for you. Yields on those bonds over there are spiking, and that is telling you yes, 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 yes to all those questions. So we have to watch that going forward. This isn't going to end easily. It's not going to end quickly or soon, despite the little holiday rally that we got in July. Now, could the rally last longer? I suppose it could, but you have to just watch the charts here for turning points and just see how it all plays out. In the meantime, there's still a lot of problems in Europe. It's not going to go away anytime soon. Now, last night, China raised rates by a quarter point. So they raised their key interest rate, People's Bank of China, by 25 basis points, or what we would call in the business a quarter point. And traders should watch that today on the FXI. So traders should keep an eye. Yeah, FXI is already trading lower. So again, watch the FXI. That could be under some pressure this morning. Chinese ADRs could be under pressure as well. Stocks like Baidu could be under pressure. Watch stocks that have been leading lately, like Sina. They could be under pressure. So any of these popular Chinese ADRs that are out there, American Depository Receipt stocks, you're going to have to watch. They could be under some pressure, at least initially early. But I would keep an eye on the FXI. I think that one could be under pressure, at least in the morning time. Okay, we'll see how the market shapes up and where it goes. Now, a couple things to go over. Yesterday, oil got a huge bounce. Huge bounce. Today, you're getting a little bit of a pullback. The USO closed yesterday at 37.96. Today it's at 37.72. So getting a little bit of a pullback. Gold had a huge move yesterday, all on the back of the European debt crisis. Today gold is trading right around 147.46. Yesterday the GLD closed at 147.63. So you can see it down slightly. Silver had a huge move yesterday, all on the back of the European debt crisis. Closed at 34.63 yesterday. Today it's trading at 34.45. So all gold, silver, oil trading down just a little bit. As the dollar gets a little bit of a bid, these things are deflating a little bit. But remember, gold and silver will react very often if there's a crisis or geopolitical event. such as what's taking place in the European Union. So keep an eye out for that. Right now, I don't see anything horrible there, and they did have great moves yesterday. One thing I have noticed this morning, everyone should take note of, the bank stocks. Let me just pull up Bank of America. This stock is down about 20 cents this morning. So BAC trading lower on the day. JP Morgan trading lower on the day. Yeah, not big down moves, but nonetheless, bank stocks are showing early weakness, and that should be noted. Okay, you have Wells Fargo, another one, trading lower on the day. So all of these stocks, these bank stocks, large bank stocks, are trading lower, and that's very, very important going forward. So remember that bank stocks are market leaders. When the bank stocks struggle, the market struggles. Yesterday, the bank stocks did struggle a little bit. Goldman Sachs sold off a little bit, and you saw the markets come under a little bit of pressure, really finishing the day flat. So we'll see today how this market plays out. But right now, in my opinion, as long as the U.S. dollar index is moving up, I have a hard time seeing the stock market move up. You could even look at some commodity names like Freeport-McMoRan trading lower this morning as well. So in my opinion, it's all about the U.S. dollar index, and if the dollar moves higher, that's telling you there are problems in Europe, in the European Union, and you have to really take note of that. And remember, it's still an inverse relationship to the dollar. It doesn't matter if commodities aren't reacting that well. The overall markets are still reacting to where the dollar goes. Dollar goes up, the markets generally will go down. Okay, I think that pretty much sums it up, everything I wanted to cover. There's not that much out there today as far as stocks go. Normally, I like to give you guys a heads up of what could be a pre-market mover or what could be a fade candidate. I'm just not seeing anything today that's really standing out to me, at least not yet. Semiconductor stocks are getting hit. They're definitely under pressure, but they've had a good run, so we can't make too much out of it. If you want to look at a stock like, I believe, Applied Materials, yeah, pretty big fall today. SanDisk is also under weather today. If this is a right print, I'm not sure, but this is another stock. So, but AMAT looks like it is under pretty good pressure. So that's a pretty good fall there on AMAT. So you could watch some weakness in the semiconductors. But really, outside of that, I'm just not seeing a whole lot at the moment. Okay? All right, with that said, ladies and gentlemen, have a great trading day. I'll see everybody on the charts at 9:30. Take care now. God bless.